Hello traders and welcome to another video review. Today is Friday, March 17th, 2023. Let's find out what is going on the Forex economic calendar today. On Friday, we got data from the Japan Tertiary Industry Activity Index. Data were published at 5:30. But during the European session, we got the CPI data from the European Union in form of the core CPI and the overall CPI. The market expects the CPI to remain on the level of 8.5%. During the New York session, we have data from the Canada in form of the RMPI and the foreign securities purchases, and we have data from the US in form of the industrial production and Michigan consumer sentiment indicator. At the end of the day, we got US Barker Hughes oil rig count as well, and the CFTC speculative net positions of various markets will be published 9:30 as well. So during the London session, we got a very important data release, CPI. During the New York session, there are some data here, but not that much important. We got two interest rate decisions already this week. We got the Fed interest rate decision, which was the hike, and of course the ECB interest rate decision, which was the hike as well. So let's just take a look maybe at the current situation of the majors before the weekend, in the last day of trading. Euro dollar 4-hour chart is looking very sharp, and bulls are trying to retrace as much as they can from the last very aggressive drop lower. The intraday technical resistance is 1.0680, but if you take a look at this situation, you can see that the market is right now approaching the level of, let's say, 61% of the retracement, 1.0668. So what do we have here is a classic ABC correction to the upside. So if the 61% of the Fibonacci retracement of this wave down will basically makes the market to reverse, so the rally ABC rally, maybe ABC correction, will be capped, then of course we can see some sort of the downside development. However, if bulls will manage to break above 61% of the Fibonacci retracement, above the intraday technical resistance, then we can even see some test of the recent high, the high from the 15th of the March at 1.0760. Very interesting situation. So please stay vigilant, stay focused, and see how the market will react on these levels. Very similar situation is on the US dollar to the Japanese yen. As you can see, we are now moving away from the 50 and 100 periods moving averages, and if you take a look at these lines here, you can see that we might be doing some sort of the wedge pattern again. Of course, the market keeps doing the lower lows, lower highs, so the downtrend continues, and with that momentum, negative and weak momentum, it's even more probable to market to go even lower. Nevertheless, if we zoom out, we can see that there is very interesting technical support located around those levels. This is one of these levels, and the second level is here. So we got like a zone on the US dollar to Japanese yen. So please take a look at this. There you go. This is the zone. The zone is located between 130.67, 131.19, so roughly 50 pips zone, and that might be the next target for the bears. Of course, with that kind of a momentum, with that kind of a pattern, it is possible for the market to sooner or later perform the breakout to the upside again. So what I want to place on my chart is breakout to the upside possible. Okay, so that's the situation on the US dollar to the Japanese yen. Looks kind of a bearish right now, but the tables might turn anytime soon. Let's take a look at the crude oil, because we got the crude oil data, and as you can see, if we zoom out, okay, you can see that we are keep doing the lower lows even on the lower time frames. Okay, so the overall situation looks rather negative for, of course, bulls. We got the local we got the technical resistance. The local one will be placed in a minute. That's the technical resistance, 73.64. okay, that's the key technical resistance. We got the local resistance located around 69.20, and of course this low here at 65.69 will act as the support as well. It was tested once. Look at this, it was tested once. So right now we are trading inside of this narrow zone. Narrow zone is located between these two levels. We have the bearish cross. Okay, we got the bearish cross, 50 periods moving average crosses the 100 periods moving average, which is a bearish indication. So the market managed to go to the levels below the $70 per barrel. Very nice bullish engulfing pattern is here. However, there is no extension to the upside yet. So because the market is trading into the negative territory, and just recently it made the bounce from the extremely oversold market oversold levels on a 4-hour chart, the situation is kind of biased to the upside basically. So we should see more of this pullback to the upside. The local, let's say another local resistance is located at this low, 70.78. So we might go higher and then reverse, higher and then reverse. What level will be hit? Not quite sure yet. Nevertheless, it looks a little bit better for the bulls for a potential pullback or correction to the upside in the crude oil. S&P 500 bouncing to the upside, so very nice test of the 50 periods moving average, and we are trading just close to the local technical resistance, 3,971. Bearish bullish engulfing pattern made into the extremely oversold conditions on the 4-hour chart is still helping bulls to move higher. Nevertheless, this doesn't look impulsive. This doesn't look impulsive at all. So the bounce to the upside might be terminated at either technical resistance or the 100 periods moving average located at around the level of 4,003 points. So S&P 500 without any special outlook this time. And the Bitcoin. What is Bitcoin doing? That's very interesting as well, because as you can see, the Bitcoin completed the pullback. Okay, so that was the technical support. Roughly the level of 23,977 was tested, and since then we are moving higher. We are moving towards the last swing high. Okay, very nice wave progression. Momentum is still positive, is very strong, touching the again extremely overbought conditions, but the bulls are challenging now the high from the 14th of the March, 26,526, and it looks like it might be tested or even broken. 50 periods moving average crosses again from the bottom to the upside. It crosses the 100 periods moving average. So this is of course the bullish indication. with that momentum, that bullish indication, with the test of the technical support, the outlook remains bullish for the Bitcoin as well. And if we break above the level of 26,526, the next target is way higher. As you can see, I'm trying to zoom out, but I can't see the next potential target. Let me just go back to the daily, and on the daily, eventually, well, very interesting situation. There is the technical resistance here, it was violated. There was the technical resistance here, for example, 27,585, but that's just the technical resistance. And if the market will rally higher, the 32,000 level is still in the books in the longer term, a little bit longer term than it is right now. Very nice reversal here on a daily. So it looks like from the bottom, this is the wave 1, correction wave 2, and now we are expanding wave 3 to the upside. So it looks very bullish right now for the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.